Well, I think we're in a natural kind of consolidation phase. Our view is that Bitcoin is in a bull run. It's sort of the fourth or fifth big bull leg of Bitcoin.
Hmm.
If you look at it historically, as it's gone through phases of adaptation, it puts in an all-time high that holds for at least 200 days. And once that happens, when that all-time high is pierced again, which we just had in November at 20,000. On average, the next bull run is a 900% return. So obviously you can't, guarantee that, but if you just kind of look at the historical patterns and understand that Bitcoin is in an adoption phase as a new technology, then we think that that kind of a rubric makes sense. On the low end, it's 400% historically, high end 1600. So breaking through 20,000, we think that somewhere around 200,000-ish is maybe where we put in the next high. So this I would view as a consolidation. You have comments from Janet Yellen a couple of days ago. You have a lot of cross currents here, and that's absolutely fine. November is when it passed 20,000. We're trading at 47, 48. That's a big run up in anyone's book. So it's fine to consolidate here. I don't see that as a major issue.
When you talk about adoption phase, are you referring to blockchain technology or Bitcoin in particular? Because Bitcoin has been, I guess, in this adoption phase for 10 years now. It's been accepted in 2010, and usually technologies have a limited deadline for how long it could be in this adoption phase. So do you think this could last for another 10 years, or are we seeing the maturity stages of Bitcoin's life cycle?
Well, we definitely don't think we're at the maturity stage. There's this S-curve of adoption that technology goes through. And you're right, Bitcoin's 12 years old at this point. But still, when you look at the potential for investment into Bitcoin, it's absolutely stunning how much is still on the sidelines. Over the last 12 months, we've had a couple of different institutional investor types coming in that has really livened up the space. For example, publicly traded corporations, which put Bitcoin on their balance sheet, insurance companies, and even mutual funds making filings to hold Bitcoin in their accounts. These are just a few in each space, but if 20% of the companies in each of those respective silos takes a position, there's still quite a bit of adoption to go.
Okay, I often hear from the crypto community that Bitcoin should be regarded as a currency. Let's assume that it is, by definition, a currency. I have to draw parallels to the US dollar then. As you know, the dollar, like any currency, is partly driven by interest rates in the domestic country. So if interest rates in the US go up, the dollar is seen to strengthen vis-a-vis other currencies if the interest rate differential is high for the US. So for Bitcoin then, I wonder if there's any sort of relationship with interest rates in the US or anywhere else, because presumably if interest rates rise, this currency should also gain value as interest rates on these earned products, DeFi blockchain products, should also rise as well, right?
Yeah, I think that's interest rates are clearly a consideration, and perhaps as interest rates have risen recently, and you're seeing a sell-off in Bitcoin as a non-yielding asset, maybe that's part of the explanation in a microcosm. I think in the long term, the way we view it, and people do talk about it as a currency, I think the better moniker is a store of wealth. Because currency sort of implies, you can use it to pay for a cup of coffee and transactions and things like that. And as we all know, Bitcoin suffered a little bit vis-a-vis what Satoshi may have envisioned when he, she, or they wrote that white paper, in that it really is a bit clunky in terms of doing many transactions per second. However, as a potential alternative to gold in digital form, I think that's really where it's catching on. Yeah, I don't think the value of Bitcoin is zero. Intrinsic is a difficult concept to sort of define as it relates to something like a currency, because the intrinsic value of a $100 bill is kind of zero also. It's really about what that represents and its utility. And so, as we know, money is simply a system of account. It accounts for labor, it accounts for goods, and we all agree on it. And in order to serve in that capacity, it needs to have certain characteristics like durability and fungibility, and so on and so forth. And if you do that analysis, I think Bitcoin stands up really well. And frankly, as an investor in gold, I hold gold coins and silver coins and things. that's how I found Bitcoin. And over time, that's how I developed a respect for Bitcoin, because I realized that not only does it hold up in some of those categories vis-a-vis gold, it's actually better in some, not all, of course, but in some categories it's better. It's very straightforward. Our fund holds Bitcoin. We put it out at the lowest price possible. It's a 49 basis point management fee fund, and we tried to partner with the best in service providers. So our custodian for the fund is Fidelity Investments, obviously well-established firm. It's important to feel safe about who's safeguarding the assets of the fund. And if you look at the US market, there's a lot of talk about Bitcoin ETFs, and there's a few that have launched overseas and recently some in Canada, but nothing in the US so far. There's only really been one large product that has dominated and been quite expensive. So we felt it was time to bring investors another choice at a lower price point using a different set of service providers. And service providers are normally not that big a deal in funds, but crypto funds, it's a different story. You really do want to focus on where the assets are kept, how they're stored, and so on, because of the digital nature of crypto. So OBTC started trading 2 weeks ago. It's now available under that ticker symbol. And we're excited about that and some future launches we have planned. Well, there's definitely going to be costs no matter how you access your crypto. And we recognize that lots of investors want to hold crypto directly, which is totally fine. It's similar to the difference between ordering gold coins and getting excited when they arrive in the mail versus buying a gold ETF. And you're definitely going to have your purists who prefer to hold crypto, who prefer to hold gold, but other folks are just interested in the diversification and portfolio benefits of holding those investments as part of a broader, retirement plan or portfolio. And so creating this fund and setting it up to trade under a ticker symbol really allows traditional IRA investors and brokerage investors to access Bitcoin-like returns without having to pull their money out of the system, take it away from their advisor and send it to an online exchange or put it on a little USB drive or something like that. I mean, there's tons of room for development. I think one of the large obstacles I feel is bank support. So really, when you get into the derivatives markets, almost by definition, there's a lot of leverage involved, and the wholesale providers of balance sheet to the ecosystem historically, if you look at other futures and options markets, are banks. And that's because the way banks are set up and regulated, they're able to provide that significant balance sheet support. You don't really have that right now. Banks do not hold or trade Bitcoin. I mean, you're hearing sort of these little rumors that they're doing a beta test over here or there, but by and large, banks are not sitting there lending balance sheet support to the Bitcoin futures and options market. So until that happens, I think it's going to be limited growth. I mean, there's still been a significant amount of growth, but when the banks come in, I think that's when you'd really see things take off.